welcome to today's episode of Heard and Seen Around. I am Rajesh Karipurath. This is my take on macroeconomic and geoeconomic data points, which I find interesting. I hope you enjoy watching it as much as I enjoyed curating it. Cheers.
There are no grades of vanity, there are only grades of ability in concealing it. France has neither winter nor summer nor morals. Apart from these drawbacks, it is a fine country, Mark Twain. To be good is noble, but to teach others how to be good is nobler and less trouble. The safe way to double your money is to fold it over once and put it in your pocket. Letting the cat out of the bag is a whole lot easier than putting it back.
Ever since ChatGPT arrived, the Magnificent Seven did not just rally, they left Earth's atmosphere. Nearly 300% returns in 3 years. Silver, gold, Europe, Asia all did fine, but compared to big tech, they looked like they were jogging while someone else brought a jetpack. What's fascinating is that AI did not just change productivity narratives, it seems to have changed market gravity. Investors saw the future and said, yes, please, and supersize it. Meanwhile, traditional assets quietly whispered, we are still here, And at the very bottom, oil. Turns out that even commodities can get stage fright when GPUs start stealing all the attention. Here's the latest plot twist in the chatbot arena. ChatGPT's once untouchable dominance is finally showing a soft spot. Monthly downloads that soared past the 100 million mark earlier this year have now eased back into the mid-80s. Meanwhile, Google's Gemini has pulled off a full Olympic sprint from 20 million to nearly 80 million downloads in a matter of weeks. Perplexity and DeepSeek are still dispense specs on the radar, but they are growing too, quietly nibbling at the edges. The story? Competition has finally arrived. The era of a single AI superstar may be ending, replaced by a full cast of overachievers. Hedge fund holdings of sovereign debt, especially US treasuries, are exploding, now rivaling the scale of reserve managers. So what does that mean? Simple. Hedge funds have become the world's most enthusiastic lenders to governments, not because they love public service, but because yields finally pay more than pocket change. Non-US sovereign debt is also climbing, showing that global risk appetite is back, even if global certainty is not. When hedge funds own this much sovereign paper, one thing is clear, someone out there is very confident or very levered. Here's a quick and interesting tour of global asset class performances from 2017 to 2025. And if you're looking for consistency, well, good luck. Bitcoin keeps popping up like that one colleague who volunteers for nothing but still wins Employee of the Month. Tech indices Nasdaq 100, S&P 500 bounce between top ranks and mid-table like they are practicing for the Premier League. Meanwhile, the traditional assets like gold and the MSCI World Equity quietly do their job, slow, steady and never invited to the after party. The real lesson? Markets don't reward intelligence, they reward survival. India's trade deficit with China has blown past $100 billion and the rupee is sliding towards a lifetime low against the Yuan. At this point, it's less a deficit and more a long-term subscription plan India forgot to cancel. The Chinese Yuan to rupee trend shows one trend, up. The deficit trend shows the same direction, also up. Economists call this is a correlation. Everyone else calls it a sign to stop importing everything from selfie sticks to semiconductor dreams. India's GDP is still growing at a very healthy clip, but let's be honest. It feels a bit like jogging uphill while checking your bank balance. Nominal growth has slipped from the glory days of 15% to around 10%, and real GDP is steady but not exactly sending fireworks into the sky. Manufacturing is doing its best impression of a tired marathoner. Not collapsing, but just mildly questioning his life choices. The real twist? Consumption has cooled, investment is yawning, and exports are the only participant showing enthusiasm. Imports are back too, like their friend who insists that they weren't gone for long. Overall, the economy looks stable, but the trend is gently pointing downwards. Global stock exchanges have surged to an eye-watering $147 trillion, riding a 17% jump in just 1 year. It's a kind of chart that makes optimists cheer and risk managers quietly increase their coffee intake. Sure, there's a tiny 0.4% dip from October, but after a run like this, markets probably needed to stop and catch their breath. What's striking is how resilient equities have been. From pandemics to rate hikes to the AI boom, the long-term line only knows one direction, up and to the right, like an overconfident intern drawing targets in Excel. Manufacturing in India isn't just about steel and autos anymore, it's sari hems and shirt collars. With 12 million custom tailors, India now has one tailor for every 6 manufacturing workers. A thread-powered revolution, but with a big twist. 99% of them operate informally with barely any formal training. UP, Maharashtra, Bengal and Bihar alone stitch together 40% of the nation's tailors. As George Carlin quipped, the caterpillar does all the work, but the butterfly gets all the publicity. In India, the tailors may finally get theirs.